Hello and welcome to this week's Australian Stock Market Report. Now this week, we're going to look at recessions and how they affect the stock market. Then we'll get into the Australian stock market so I can share with you my thoughts on where it's heading, along with answering your questions and looking at stocks for you. Hello, I'm Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Now before we move on, thank you for showing your support for our channel and hitting that subscribe button. Now remember, as you subscribe, please click the little bell on the right of it so you keep up to date with our latest videos. Also tune in to our live Australian stock market show, which is on every Tuesday, 7 to 8 p.m. Australian Eastern Daylight Savings Time. Now this is the show where you get to ask us, the stock market education and trading experts, to look at your favourite stocks and answer all of your most burning questions. Now today I was reminded about investor psychology and the old saying that if you follow the masses, you're probably going the wrong direction. Now everyone seems to be talking about a world recession in 2023, with some arguing that the US is already in recession and that Europe and the rest of the world will follow on. But is this really bad for the stock market? Well, the answer may surprise you, because it's contrary to what the masses are spruiking, particularly as recessions are generally good for the stock market. A recession is categorised as 2 negative quarters of GDP, and Australia has experienced a technical recession in 2000, 2006, 2018, and we saw one in 2020. Each time the market had a short dip before rising strongly. Now the recession in 2020 was a little different, as it was an event driven due to the COVID-19 pandemic, which saw the world quickly shut down, while the other recessions simply slowed the economy. Now the question right now is, if Australia does go into a recession in 2023, will the stock market dip again? Now I believe this is unlikely, as the market is indicating that it will rise in 2023. The COVID recession was a little over 2 years ago, and unlike what occurred after previous recessions, our market has not been overly bullish. Given what has unfolded in the last 2 years, including increasing inflation and rising interest rates, I do believe the market has already factored in a recession. In essence, if everyone is thinking that the market will fall and has already factored in the worst, then moving forward, the market must rise. The contrarian view that Buffett talks about rings true right now, because if everyone is afraid of the stock market, this spells opportunity for those who remain unemotional and patient. Now it's time for what were the best and worst performing sectors last week. Well, the best performing sectors, they included utilities, and that was up 5.04%, followed by industrials up 2.44%, and financials, that was up 2.05% last week. The worst performing sectors included information technology, that was up 0.14%, followed by materials up 0.47%, and energy, that was up 0.9%. The best performers in the S&P ASX Top 100 stocks included Virgin Money, up 23.81%, followed by Whitehaven Coal up 10.74%, and AGL Energy, that was up 7.41% last week. The worst performing stocks included the Star Entertainment Group, which was down 6.85%, followed by Block, and that was down 6.49%, and Pilbara Minerals, that was down 6.30%. Now before I bring up the charts and get into my thoughts on the Australian stock market, I really did want to remind everyone that in 2023 I will be expanding on these stock market reports, going into a lot more detail in several areas, and my intention is to also discuss world and other markets. Now these full reports will only be available on talkingwealth.com and will not be put up on YouTube. So if you wish to continue watching, then you do need to head over to talkingwealth.com. This also means that what Janine and I do here on YouTube will also be greatly reduced, but we'll be doing so much more on talkingwealth.com, including we're going to run some live educational seminars, so wait for those ones. So head over to talkingwealth.com and subscribe. So what do I expect in the market moving forward? Well, let's get into the charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me. Well, last week certainly was an interesting week on our market. Monday was down, and I thought, well, okay, the market is turning and we're going to have that 1 or 2 week down, or start that move for that 1 or 2 weeks down that I was expecting or have been talking about the last couple of weeks. But Tuesday, Wednesday, Thursday and Friday, the market just went up. We made a new high as well. It went straight up, and it went through some other important highs as well. So looks like we'll have to wait just a little bit longer for the market to turn around and go down into that 1 or 2 week low that I am expecting. To me, it's not a case of if it's going to happen, it's just when it's going to happen. But let's go and have a look at the charts and we'll see a little bit more about when it is going to happen. On the screen is a weekly chart. I won't bring up the monthly chart today, and I'm just using the weekly chart that I showed you last week. I've left all the data on it from what I was showing you last week about all the different runs and how they were. And this one's now we're saying around 12% was pulling these runs up on the All Ordinaries Index. So we're still in that sort of ballpark at 12.66%. This one was 12.68, 12.23. So if you weren't sure what I was talking about last week, go back and watch last week's recording. Now, last week I was expecting that this possibly was a turn in our market and we would come down for 1 or 2 weeks. But as I said, Monday, and I'll just show you the daily chart. You can see here Monday, that's Monday's bar. It came down a little bit. Thought, okay, now we might be moving down. But look, Tuesday, Wednesday, Thursday, Friday, real small bars here on Thursday and Friday, which doesn't show a lot of strength on our marketplace, but we had a few small bars through here. So whilst we are moving up, we're not really moving up with a lot of strength. And what it means is the momentum has changed. And I do talk about momentum a lot, and you can see the speed of this move up with huge big bar, very, very fast one going through there on the week ending the 11th of November. But since then, it's just leveled out a little bit. So I am expecting 1 or 2 weeks down. And if we go, and I'll move that over to there. Now, I'm still expecting that to happen. Now, we need to remember this was the last bull run that we've seen on our market, and that was 8 weeks before it turned and fell away quite heavily. Here we've had 1, 2, 3, 4, 5, 6, 7. So we're 7 weeks up in. If we go back through here, you'll see that 8 weeks up straight up without a pullback doesn't really happen that often. There's 1, 2, 3, 4 weeks there. Keep going through here, 1, 2, 3, 4, 5, 6 weeks, really sort of pulled back and went through there. There's really not too many weeks. You'll find there was 8 weeks straight up without at least one down week. We're seeing any of these red bars are down weeks. And even this moved right out of this March 2020 low, which was the COVID low. 1, 2, 3 up, 1 down, 1 up, 1 down, 1, 2, 3, 4, 5 up. So it's not common for our market to go up this fast, or 8 weeks up without having a down week. You can see there's not one red bar in here, and through here that's an inside bar and everything is green. It's pretty much we haven't had a down week, so we are due for a down week. I would have thought we would have had it this week, but it didn't happen. So, I'm expecting it any time. And this is the thing with looking at the marketplace is people want certainty, and you're never going to get it on the stock market or in individual stocks. You never get certainty. All you get is probability. And the probability is the more this rises, the higher the probability it's going to fall again. It down 1 or 2 weeks. Now, I would have preferred it just took a bit of a breather and come down 1 or 2 weeks, but the more it rises, generally, the more it falls is what happens here. So the momentum needs to slacken off a little bit, come back down a little bit more manageable. But as I said, I think there's a lot of strong support between 7,200 points, and I'll put that there. So around about there, 7,200 points and 7,000 points is very, very strong. I don't think it'll go below those in that 1 or 2 weeks down. So we might get down to about 7,200. We might get down to 7,000 points before taking off. But from where it is right now, at the close on Friday, 7,200 points is about 3%, and down to 7,000 points is about 6%. So you can see here that it's nothing too much to be worried about. But again, I think one maybe 2 weeks down, but it does look really, really good moving on through till Christmas time. I think our market is looking good. I still think it's looking really good for 2023. There's a lot of stocks in the top 50 stocks looking so nice. Now, a little bit early, and right now is not the time to go out, even though the market's bullish, not the time to go out and wholesale put your money into the market. This is what a lot of people do, and that's what we talked about, the contrarian view a little bit earlier in my report here. If everybody's trying to get into the market, that's generally the time when you need to be careful in getting out of it or watching what you buy, because that's just before the market tips over and comes down. Now, whilst I'm only expecting 1 or 2 weeks, it'll pay you to be a bit patient, a bit more selective. So I'm not saying don't buy stocks right now. If a stock really does present a good opportunity for you, still get into it. But just knowing the market may soften over the next 1 to 2 weeks or possibly post you buying that stock. But at the moment, I wouldn't just be dumping all my money into all the stocks and hoping that this run was going to continue, because as we know, the market goes up and it goes down. It just doesn't go up because, 8 weeks up, as I showed you a little bit earlier, is a little bit rare. Doesn't happen often. We're up 7 weeks again, so 2 times in this year. That's a little bit unusual, seeing that sort of run twice in the same year. So to me, we're in a little bit of unprecedented territory, but what I do know is the market will go down. But that's my take on the market at the moment. It is looking good. I think, as I said, 2023 is going to be a good year, and there's going to be some great opportunities in financials, materials, and I was about to say consumer staples, consumer discretionary. One of those, I think, is probably going to be a better sector to get into over the next 12 months. But Janine and I will keep you up to date with those anyway. But now's the time to answer your questions. The first question we have today is from Mike, who says, "Hi Dale, if you are deciding which stock to buy, trend change down to up, same strong momentum up, but 5%, 10%, 25%, 50%, 75%, 100% down from a 52-week high." Oh, if something was down 100% from a 52-week high, I don't think I'd be buying that stock. He's going, "My guess is closer to the high, the better probability of a better trade." So I'm thinking if he's thinking 5%, 10% down is a better trade. I'm not having a go at you, Mike. I don't think you've articulated your question that well, because it's a little bit confusing what you're asking. And I think what you mean is if a stock's coming off a 52-week high, the least it comes off, the better. I think that's what you're saying. Not necessarily is the answer. And Mike finishes off his email saying, "Please educate me, oh wise one." It's really about, how do I say that? It's very hard for me to explain it properly without you knowing a lot of analysis techniques that we actually do. If a stock comes off 5% and turns around, you'd think, yeah, that's pretty good. There's much strong momentum in there. But is that going to be what they would call a blow-off, basically, or rampant speculation, where you get this little dip and then it takes off really quickly and then it catches a lot of people? And we saw that prior to the GFC, our market came down into a June low, and then banks and materials, banks and BHP, Rio and Fortescue all took off for a couple of months, took the market with it because they're such big stocks. Obviously, with all the banks, the big 4 banks, BHP and Rio and Fortescue, if they move up, they take the market with them. The rest of the market was looking weak, but it did take the market with them. Now, Janine and I decided to stay right out of that, and then because we knew the GFC was going to happen, we just thought that was just a bit of a, how do I say it? I was going to say a knee-jerk reaction, but it wasn't necessarily a knee-jerk reaction. It was a last gasp effort of everybody trying to get into the marketplace, pushes it up strongly, and then it turns around. So you might think 5% down or 10% down or even 25% down, and it really is about context of the situation. It depends on the stock, it depends on the market, it depends on the situation at the time, it depends on what's going on. So I can't just blanket say the least amount that it falls off a 52-week high, the better the momentum or the stronger the stock or the better the buy. And one thing I'll say to you, and if you've watched the live show last week with Janine and I, we talked about a lot of people try and use, the 52-week low as a buy. Janine and I never, ever, ever look at the 52-week high or 52-week low. So what does that tell you? If we don't look at it, we don't find it's a very, very good metric. So therefore, I would ignore that if I were you and look at better rules of buying and selling and looking at strength and weakness. And again, I can't get into that in depth simply because I'd have to teach you a lot of technical analysis for you to understand how to measure strength and weakness, which is what we do in our courses. In our diploma course, we teach people about how to understand the strength or weakness of a move, how far a move is likely to be, how far a stock's likely to fall, where are better places to buy, how to recognise when trends are running out. There's so much more that we teach, and the thing is I can't do that on YouTube. This is free, and I'm not going to teach people on YouTube for free like we do in our courses, because information's not education. And I could tell you everything that's in our course on YouTube, and I can guarantee you probably couldn't do it, because it's about understanding how to do it. And that's what I was saying a little bit last week. It's knowledge is one thing, understanding is another. So just reading a book about something, you might have some knowledge about it, but you probably don't understand it really. And that's the difference between a good education and just any education in the stock market. And I find a lot of people go, I'll just keep watching YouTube videos because I'm learning a lot. But they're still very, very hit and miss in their trading. They still lose a lot of money. And every week we talk to people, or our team talk to people, two people that have been trading 2, 3, 4, 5, 10, 15 years, and they're still playing this game of hit and miss. And then they're ringing us up and going, yeah, I'm trading and I'm trading really well. And I go, well, if you're trading really well, why are you inquiring about our education, and why are you talking to us if you're trading really well? What's the real story? You know, you can't BS yourself, and people often try to do that. And at the end of the day is there's a reason why they do put their details down and want to talk to our team. And it's because there's challenges in their trading. And to me, to get that, you need to get rid of that, you need to have great knowledge, but also have good understanding. And good understanding comes from working with a team of people who can mentor you through and make sure you're applying everything correctly in the correct context. Because just analysis isn't enough. It's applying the right analysis in the right context gets you the right answers and gets you a higher probability, which means you're a better trader. So a long-winded way for me to say, I'd love to answer your question a little bit more, but I can't, because I'd probably start spinning people's heads. But anyway, thank you for the question. I do appreciate the thinking that goes behind what you put into what your question was, because it's great thinking. It's just not necessarily going to work, I don't think. Anyway, moving on, the next question we have is from TJ, who says, hi Dale, I've been watching Reckon or RKN, and it has a big drop recently. I wrote in about this stock a while ago and you said to watch, not to buy. Thanks for that. How much further do you expect the share price has to fall? That's another one, is how long is a piece of string? And people often ask me, well, you know, how far do you think this stock will go, or how far do you think this stock will fall? I don't know. Zero. I don't know. I have got no idea. The stock can fall to zero. It can go bankrupt. It can go off the exchange. It can go up 100%. It can go up 500%. I don't know. The stock will tell me. I can have price points where I think it might go to. I can have price points where I think it'll find support or get resistance on the way up. But they're probabilities, it's not absolutes. And today I can do a full analysis on Reckon and go, I think it's going to do this, it'll probably fall to this point, but it may not be right, because next week something might happen, or tomorrow something might happen that might change my opinion. So giving you a price point is reckless on my part, because it will give you a false sense of security, I suppose. You go, okay, Dale says it's going to go to this price, so therefore I'll wait to buy from that price. And when it hits that price, you go and buy, and then it falls further. And I don't want to do that. And it's great that you stayed out of stock. Sometimes I get it right. You know, sometimes I get it wrong. Sometimes I say, I stay out of this stock and it goes up. But because that's the market. I can't control the market. I only can control when I get in and when I get out. And this is what a lot of people don't recognise. They hear the words that Janine and I say, but they don't really understand what we're talking about. But we always wait for confirmation of a move and get a trigger on that move before we buy. So whilst we may look at a stock and go, that looks a little bit weak, it hasn't told me enough to buy it, and it might shoot off like a rocket, or another stock might say, hey, geez, that looks pretty good. Looks like it's going to continue up, but it falls away. In this case, you know, as I said, to stay out of Reckon. Well, I would have said I'm not that excited about Reckon. It's possibly going to fall further, and it did, and you've saved money, and that's great, and hopefully you bought my book with the money that you save. But let's go and have a look at the stock chart of Reckon and have a look at this. This is a stock, and it's been going down since way back there in 2011, so it hasn't had a big history. And look at it, it's quite choppy. So it runs when it runs, and it trends quite well when it trends, but look at this move. Big, 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 big move. Now, I would just go straight away to the ASX and work out 55%. They probably had a stock split. That would be my guess, and that's just a pure guess when I've seen that. Nothing falls out of bed that fast. And let me have a look on one day. Look at that. On one day, this stock went from that point down to that point there. My guess is this has had a stock split, so I would just go to the announcements on the ASX. Have a look at that big gap too. So it might have been a takeover target here, and could possibly be the takeover didn't happen or nothing happened, and then they pulled back out of the deal. There's a couple of different scenarios, and I'm just guessing because I haven't looked at the actual announcement, but the announcements will tell you what happened on the 7th to 8th of November, but since then it's fallen away even more so. So look, right now just stay out of it, because could it go to zero? Yes, it could. Could it go below that low? Yeah, it could. So that's the lowest low I've seen so far, or that happened on this stock so far. That's 39 cents. Could it go down to there? Yeah, it could. That's its level of support. But could it break that level? Yes, it could. And that's why it's about trading on confirmation, not speculation, having good rules around when to buy and how to understand a stock stop falling and starting to rise again, because it puts more money in your pocket, and rather than taking money out of your pocket. But right now, this is not an exciting stock to own. So I'm not sure, exactly, I'm not sure at the moment what would get me excited about it, but it would need to do a hell of a lot for me to get too much or really excited about it. But so just at this point in time, sit on your hands, don't worry about reckoning, just watch and learn. But first place, I would go and look at the announcements to see what happened and start to understand what's going on. But anyway, thanks for sending in your questions, and thank you to everyone for your comments. We got a lot of comments in this last week. Not too many questions. It's quite interesting. We only had 2 questions this week, so thank you very much for those who did make lots of comments and thank Jenny and I for our reports and what we're actually doing. I really do appreciate your comments there. Remember that if you do have a question, the best way to have your question answered is to publicly subscribe to our channel and then type your question down below in the comment section. If you publicly subscribe, your answer or your question will get answered that week or in that next recording. So remember that here on this channel we do these Monday market reports each and every week. We also do our live stream on Tuesday night, 7 to 8 p.m. Australian Eastern Daylight Savings Time. So remember, get on to see Janine and I next Tuesday night or tomorrow night at 7 to 8 p.m. Hit that subscribe button now, click the bell on the right of it, give us a huge big thumbs up to tell us you like our videos, and let's try and smash that like button to see if we can get a record on that like button. That's it for me. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye. Good luck and good trading.